Good evening, everybody. Good evening. Welcome back to another episode of the Coffee Hour, where we're going to be talking about stock market news and just kind of going over the day as a whole. So I am still catching up. Give me 1 second here. Still catching up. Hope everyone's doing well out there, enjoying their time. Today, it looks like the news is kind of wild. We have some news about crypto that we're going to be covering. We have some news about some semiconductors, especially Taiwan Semiconductor. We got some news about Jerome Powell and some news about Trump, of course. So we got some things to cover. So today should be rather interesting. The markets look kind of weird. Like it's just continuing the chop. So we'll see how it goes. We got Skeptic in the chat. Hey man, welcome back. Thanks for joining. Skep, we need to get we need to get you on live or something, man. If you can. I gotta fix my mic here. Because you be dropping all these ETFs and I can't keep up with it all. We got Evil Duck in the chat. Hey, welcome back. All right. All right, guys. Well, let's get into it. All right. So first things first. Let me skip all this. Yeah, this is the tool that I'm gonna start using to try and keep up with all the new crap that keeps coming out, all the new ETF launches. It looks like Stock Analysis does a pretty good job of keeping an updated database. So I'm gonna do my best that in the future, if something interesting drops, like cabs dropped for Roundhill, but we already kind of talked about it. But yeah, I think we'll do something like that. But yeah, like I was saying, Skeptic, you be dropping the most obscure fringe freaking ETFs, man. And I look at them from time to time, but I can't keep up with them all, man. That Venezuela oil, hell yeah. That oil. Oh man, we got Alex in the chat. Damn, man, it's been a while since I've seen you. Let's see. All right, guys. Let's try to get into some news, some important stuff here, because this stuff does affect us. It affects our money. It affects our stocks. All right, so let's see the first one up. Again, some of this stuff is going to be fresh for me. Like I haven't watched any of the YouTube videos. I kind of just pulled them up, so we'll watch them together for the first time. It was just stuff that I found interesting, or at least the titles were interesting. But first one up is the dollar rises as U.S. jobless claims unexpectedly fall. I think this was huge. I woke up in the morning, saw this, and I was like, I don't know why the market didn't rally, but it didn't. So we could see, that the market pretty much, it did. Like I was looking at it on the market open, it looked like we're starting to push higher, and then it just kind of sold off. Again, very choppy, volatile market we have right now. Anyways, the dollar rose on Thursday after data showed that the number of Americans filing new apps for unemployment benefits unexpectedly fell last week, further boosting expectations that the Federal Reserve will keep rates on hold for the next several months. Again, I think that is that is what a lot of people were kind of betting on, was that we were going to be getting rate cuts sooner rather than later. It doesn't look like it is the case. I haven't even looked at the CME FedWatch tool yet to see kind of what the bets are, or even what poly market. Man, my mic is about to fall. Oh crap, it's about to fall. Sorry guys, give me 1 second. I gotta fix this before this whole setup falls. Give me 1 second here. Let's see, 1 second. Sorry, guys. Unbelievable. So unprofessional. There we go. Unbelievable. So unprofessional here. All right, initial claims for the state unemployment benefits dropped to 9,000 to a seasonally adjusted 198,000 for the week ending January 10th. So again, I think that's good. It's good for the labor market. It's just showing that the labor market may not be as cracked or as cooked as some might believe. But again, that means that the Fed is not going to be cutting rates anytime soon, because their big thing has been that the labor market was starting to soften. And that would be a case, that would be a tailwind for cutting rates. But since it looks like the labor market isn't as bad, or at least according to this report, we'll see how the next couple of months play out. But if labor starts to, labor jobless claims, the labor market starts to look a little more stronger, maybe we don't get a rate cut. There's been some articles out there saying that, some big banks are expecting maybe one rate cut to no rate cuts this year. So we'll see. Again, we are supposed to get a new Fed. Who knows what's going to happen with Jerome Powell? All of that is in the air right now. This one was a big one. Treasury yields rise after jobless claims signal improving labor market. So yeah, we kind of already covered a lot of that. But what I wanted to talk about right here was geopolitical risks have dominated the headlines this week, mostly about Greenland, tensions with Iran, right? There's all that in the news. And Trump was talking about, firing Jerome Powell or, the DOJ's, pursuing Jerome Powell. So there's still a whole lot of crap going on, and this is obviously affecting treasury rates. This, I think, was I read something else about Trump and Iran saying that he had spoken or that, our government spokesmen have spoken with theirs, and basically there was never an intention to strike. And this was because Iran was talking about threatening, the Middle East. We have a couple bases out there. There's one in, there's a couple out there. But, Iran was talking about striking those bases if America did make a strike in Iran. So apparently there's been about 12,000 deaths in Iran. Trump was saying that he was going to do something. He was, on TV saying he was going to do something, and now it looks like it's probably a taco event. So, yeah, that is what it is. An ongoing criminal investigation into the Fed is also raising concerns about the Fed's independence. Again, there's still the narrative of the shadow Fed that's still coming up. Trump has not announced who he has as a front runner. It's either, I think it's probably going to be Hassett. In all honesty, I think it's going to be Hassett. So Build says Jay Powell will be gone in May regardless, and that's true. I mean, he's going to be gone. But then you got to think, like, to confirm the next one, the next Fed chair is probably going to be a couple of months. I saw something that says usually it's about 2 to 3 months to get a confirmation. Once they have the hearing and everything. So even then, it's still like a 9-month, probably an 8 to 9 month thing. So even if Powell's gone by May, we still have a couple of months, and then that I think is that's going to be a very interesting time. I think that will be a very interesting time for the markets. So we have President Trump, no plans to fire Fed Chair Jay Powell. Let's listen to what he had to say.
We have been talking about this story, which has now evolved a little bit. President Trump now saying he is not planning to try to fire Jay Powell amid this Justice Department probe into the Fed chair, though he said it was too early to say what he ultimately would do. He made those comments in an interview with Reuters. The question of Fed independence came up when I spoke just yesterday with Carlyle CEO Harvey Schwartz at the Economic Club of New York, as a lot of business leaders are now being asked about this very issue.
I actually think all of this is reinforcing central bank independence. There is so much discussion about central bank independence that it existed before this investigation that you now have central banks around the world writing letters. You now have former Treasury secretaries signing letters. I think it's actually brought it to a peak in terms of a discussion. Personally, I think one of the great lessons from past crises and economic history is that central bank independence is incredibly important.
In that Reuters interview, President Trump suggested he would choose National Economic Council Director Kevin Hassett or former Fed Governor Kevin Warsh to succeed Jay Powell. So it really is the two Kevins. He also dismissed the idea that curtailing Fed independence could lead to a weakening of the dollar and a spike in inflation.
It's all pretty interesting. What Schwartz said was interesting, I think.
Well, there is this. I mean, the backlash is real.
It's on the front burner, and everybody suddenly knows and is against taking away or even chipping away at Fed independence. A couple of years ago, if you were riding in an Uber or a cab or something like that,
nobody would even know what the topic is.
And you said you think the Fed should stay independent, they'd say, what Fed?
Right.
Feds? Now, I'm sure people have an opinion. Yeah.
And I think this is a little bit reflective, actually, to give Scott Bessent some credit. When he spoke to the president, and I don't think we know the full details of it, but when he was saying, look, this could backfire in its own way in terms of what happens next, I think that's an element of that to some degree. And the other piece of this is that it's more likely, perhaps, that he, meaning Jay Powell, will stay as a governor on the board
Because
of
of
the
that.
Fed
So it's
because of this very issue.
Counterproductive for President Trump.
And so it doesn't remove that slot. It doesn't open up that slot for him either.
But you said you saw, and this plays into your overall, sort of opinion of the way things work with President Trump in charge. Scott Bessent did come out, and he didn't change exactly what he said about Jay Powell, what he reportedly said, but he did say that everyone's accountable.
Right.
Everybody needs to be accountable. There's nothing wrong with looking at the fact. It's almost like he didn't backtrack, but he sort of changed, amended a little bit. Because he might have heard from President, because we talked about it yesterday.
Right, I think you could be, I think you can hold both ideas in your head at the same time, which is, by the way, and that's one of the things that I think is important. I think as a U.S. taxpayer, you should be able to hold.
Although this isn't that.
I know that people say that. I think you should hold all of these agencies and institutions accountable. I think that Scott Bessent and I agree on that. I think the question.
Yeah. So again, just, more Powell drama. Yeah, just more Powell drama. This thing is going to drag on for a little while. I don't think it could damage the markets any more than it already has, as far as like drop in the stock market or anything like that. I was thinking that this could be, one of those indicators that would start to signal, like a market sell-off, like a huge market sell-off, but it doesn't seem like it has at all. So it looks like the market probably either just got over it or they really don't care. Because the market's, again, just been chopping up and down. There was some big news that just dropped from Brian Armstrong. If you don't know who Brian Armstrong is, he's the CEO of Coinbase. So there's this big thing right now in Congress to pass the Clarity Act. Right before, I guess they were supposed to start debating this and start having their hearings and everything, Brian Armstrong dropped this on Twitter, and then they kind of put a pause on the Clarity Act. So according to the X-Post from Brian Armstrong, after reviewing the Senate banking draft text over the last 48 hours, Coinbase unfortunately can't support the bill as written. There are too many issues, including a de facto ban on tokenized equities, which would be a huge blow to someone like Robinhood, DeFi prohibitions giving the government unlimited access to your financial records and removing the right to privacy. That's kind of a big one, especially in the crypto world, because the whole point of that was to be anonymous. Erosion of the CFTC's authority, stifling innovation and making it subservient to the SEC. The SEC right now is very friendly because under the current administration, very crypto friendly. But again, if that SEC chair was to ever get removed, that would be probably a big blow for crypto, depending on who they put it under. Or who the SEC next chair would be. Draft amendments that would kill rewards on stablecoins, which is a huge thing, allowing banks to ban their competition. So we appreciate all the hard work by the members of the Senate to reach a bipartisan outcome, but this version would be materially worse than the current status quo. We'd rather have no bill than a bad bill. Hopefully we can all get to a better draft. We'll keep fighting for the Americans and for economic freedom. Crypto needs to be treated on a level playing field with the rest of the financial services so that we can build this industry in a safe and trusted way for America. So again, I think this was a strong message from one of the bigger names in crypto, obviously the Coinbase CEO. So we actually got to see him have a conversation. Let's see. I believe it's right here. Yes. So let's listen to what Brian Armstrong had to say. Let's see. We have Real Evil Duck working hard to excuse the ramblings of an old man. I suppose so. Shit sounds anti-crypto. What the hell? Yeah. Honestly, I didn't fully understand what KYC meant. Going back to this, KYC. KYC is short for Know Your Customer. And there's very few, if any, crypto exchanges, based in America, probably none at all, that don't have a KYC, a Know Your Customer type of onboarding process. What that is when you sign up for these exchanges, you have to send in your driver's license or a passport photo or something, right? They have to know who you are. And that's basically just a way for the government to track you, right? For the United States government to track you. Not all exchanges require it. There are some that get around it. One of the big popular ones that I know, or the ones that I'm starting to see a lot of, is Bitunix, I think. So Bitunix is they kind of waive the KYC requirements. And even out here in even out here in the land, there's a lot of crypto traders that try to get around that know your customer thing. Because again, like the whole point of crypto is to be anonymous, to get out of the financial system. And the way I always looked at it is a lot of these people, people in crypto, people in trading crypto and things like that, they just don't want to pay taxes, right? That's really it. Your boys don't want to pay taxes because they be getting these insane gains. So in some countries, there's ways around it. Like here in Thailand, they just put a law out. I think for 4 years, you get no tax on your crypto gains. So people out here are going crazy. But all of that also, I think it's Puerto Rico that if you live there for 6 months out of the year or something like that, I think it's Puerto Rico, your taxable gains like go to zero or something. It's something ridiculous. So you have people like Logan Paul or the Paul brothers. They live down there in Puerto Rico 6 months out of the year or something like that. So there's a lot of ways around paying taxes. But anyways, we're getting off topic. Let's listen to what Brian Armstrong had to say.
After the crypto market structure bill, our Emily Wilkins, he's now joined by the CEO of Coinbase in a first on CNBC interview. Emily, take it away.
Hey, Frank, thank you so much. And Brian, thank you again so much for joining us on, I know it is a very busy day for you. Obviously, in your tweet last night, you laid out what your concerns are with the bill. Too many restrictions on rewards, not enough CFTC oversight here. You mentioned issues with the DeFi space. I won't rehash all of it, but you've been working with lawmakers so closely on this. Why did it all fall apart at the 11th hour?
Yeah, well, first off, I just want to say a big thank you to Senator Tim Scott, Senator Lummis, and really all the banking and ag committee and their staff that are just working tirelessly to get this done. And Coinbase and I think the rest of the industry is committed to continue to show up as well to make progress. So, we got to see the draft text on Monday night, and about 36 hours later, as we were looking through it, we started to notice some issues in the bill. And we developed this concern that if it went into a markup, the only way to edit some of that base text would have been through an amendment, and amendments had already been submitted. And so we didn't think it was prudent to have it come out of committee with a bunch of these issues in the bill, which would have been catastrophic, I think, for the average American consumer. And so we decided to voice our opinion about the current state of the text, and without commenting on procedurally whether the markup should happen or not, I'll defer to the Senate on that. And so I think we've got a chance to do a new draft and hopefully get back into a markup in a few weeks.
So even though you've been meeting with lawmakers for months on this, you were still surprised by some of the things that came out in this draft that was released really Tuesday at midnight, I believe.
Yeah, well, this bill is hundreds of pages, and so many of the issues that we'd engaged on were present, and great progress had been made. I know that there's many voices that they are trying to engage with to make sure that people's concerns are addressed in a very bipartisan way. But yeah, there were certainly some things which came out which we were surprised by and had issues with.
And what is your sense about what the next step forward are? I know that you've met with lawmakers today, met with lawmakers last night, meeting with the administration later this afternoon. Is something going to get done here, and what is the time frame that it needs to get done by?
Yeah, well, I think the high-level principle here is that we can't really have banks come in and try to kill their competition at the expense of the American consumer, right? People in America should be able to earn more money on their money. I think stablecoins are an opportunity for banks. They should be able to build great product lines with this. It's an opportunity for crypto companies. Congress and the laws that get passed, they should really create a level playing field and say, this is allowed, this is not allowed. Now, all American companies, go compete, try to build the best products and services. That's great. What's not great is if the banks can put their thumb on the scale to try to kill some of their competition, and they only pay about, 14 basis points on the average savings account. Consumers should be able to earn 3.8% on their stablecoin rewards. And so we're going to keep fighting for our customers' rights and the 52 million Americans who use crypto every day.
I mean, what would you say to the argument that banks have put forward that because of the role they play in the economy, the loans that they make, if they do wind up seeing billions of dollars, as some have estimated would happen going from banks to stablecoin, they say that could have a big impact on the economy. What's your response to that?
Yeah, well, banks don't have a monopoly on lending money. Actually, crypto is doing quite well in this area as well, and crypto is a technology to update all parts of the financial system, whether it's lending, capital formation, et cetera. So I think banks do play an important role in the economy and making these loans. Crypto should be allowed to do similar types of activity. We're not engaged in fractional reserve lending. That's an important point, by the way, because the bank license, what that really allows you to do is fractional reserve. The banks don't have all of your money there. That's why there's so much oversight, and you can have these runs on the bank. Stablecoins have 100% reserve, right? And they're all the assets now post-Genius are held in this short-term U.S. Treasuries. So in my view, it's actually a safer place to store your money, and crypto companies should be allowed to compete and offer loans just like banks.
Interesting. I know, going back to the timing piece of it, Senator Cynthia Lummis, I asked her if this could be done the next month. She said, look, it might be February, it might be March, could potentially be even later. Is that the timeline that you're seeing play out with what you're seeing in these negotiations?
Yeah, well, we're going to keep pushing for urgency here. I think everyone that we've spoken to has a sense of urgency to keep making progress. So this is just the next step in the negotiation. It's causing people to come back to the table, rethink some of these issues, make sure we're signing up to do the right thing for the American consumer, and put out legislation we can at least live with.
This has been the #1 legislative priority for crypto. What is it going to mean if it isn't able to fully get done this year?
Yeah, well, I would prefer to have a bill get done. I think it creates clarity that allows this industry to get built in America. But frankly, I'd rather have no bill than a bad bill, right? The current draft text that was shown to us earlier this week, for instance, would kill probably 3 or 4 different product lines that we have already in market. And so if this is going to be a giveaway to the banks, I'd rather just stick with Genius, which is already in law, and we're able to operate our business just fine in that environment.
Well, first off, hey, welcome here, Victor, Padre, Odysseus 4. Hey guys, welcome. So Padre or slash Victor, as we know him as, so much oversight. We're more leveraged than Lehman Brothers. I was talking with someone. So the other night or morning, I don't know. I did a podcast or something rather. That'll be dropping probably in a couple of weeks. But, the question was, about Bitcoin volatility, right? About Bitcoin volatility. And because of so much mass adoption of Bitcoin, what could happen to that volatility, right? And, will it get more stable? Will volatility lessen? Things like that. And my counterpoint to that, or at least my point to the conversation was that, in order for Bitcoin, from what I've heard, in order for Bitcoin to reach these really crazy new all-time highs, it has to have the volatility, or else it will never have, it won't be able to reach those all-time highs, period. Like, it's just never going to reach it. That would obviously affect all those covered call ETFs, all the high yield ETFs, et cetera, that do, that do their strategies on Bitcoin. But what I see as a tailwind of something that would never, or that would be a tailwind for the volatility would be, pro volatility, is that the leverage that these market makers have, or that these brokerages allow, or that these, trading platforms allow, 10x, 100x, whatever it is, like that leverage will always be there, hopefully. And that's what's always going to keep the volatility interesting for Bitcoin. Right. So that was kind of my point when we're talking about, Bitcoin's volatility. Now, when it comes to the other cryptos, I mean, I don't freaking know. I still think by and large, 99% of the cryptos out there, the altcoins, the shitcoins, meme coins, et cetera, all of those are just garbage. If you're a trader and if you're on the inside before an ICO or before an initial coin drops and you get the airdrops and everything else, I guess you could make a lot of money. But usually those by and large are just pump and dumps from what I know. I'm not a huge crypto guy, but that is just what has been my experience. All right. So real quick, just after that Clarity Bill talk happened, we saw Coinbase stock. We had a dip. For Robinhood, we also had a dip because you got to think, Robinhood, they have the tokenized stocks in the EU, right? They do tokenized stocks. And I thought I saw that they were trying to offer tokenization equities here in the United States for certain things, for certain private companies. If that bill was to get passed and they were to kill that, then obviously that would be bearish for Robinhood. And we also had Bitcoin that had a sell off. It's still above the 95, which thankfully is good. It didn't really have too bad of a sell off, but it looks like, it dipped just a little bit, probably around that news. Same thing for Ethereum, right? Bitma and Immersions right now, they just concluded their annual meeting or their shareholder meeting. So I want to definitely try to get the highlights of that, or I might just watch the whole 2-hour stream. They had OpenAI and they had Ethereum's founder on there, Vitalik, if I'm not mistaken. So Sam Altman and Vitalik were at the BMNR meeting. So I definitely want to try and catch that. Big Hat says, keep crypto a casino. Absolutely. Real Evil Duck says, hey, Pudgy Penguin is the way to go. I might make myself a Pudgy Penguin and then try to sell it now. NFTs is the way to go. That was such a stupid craze. Like, I remember when that whole thing started to pop off in, what was it, 2020, 2021, that time frame. And it was ridiculous. Like, there was so much money being pumped into NFTs, crypto, just everything. You couldn't lose, right? This is meme stock mania at the time. This is like GameStop, AMC, all that stuff. And just to see the NFT, like, I thought that was stupid, because what would stop you from, just taking a screenshot and then saying you have it, right? I had friends that were creating their own NFTs, right? They're going on Fiverr and just hiring an NFT artist, right? Like, this is real. Like, you could hire an NFT artist to design 250 NFTs, and then they went to some other website to start the NFT collection. It was so stupid, and I mean, none of them actually made it, big at all. But it was still like just an obnoxious amount of money being flooded into these things, and then just they're worthless now. By and large, a majority of these things are worthless. I've seen the use case, like some people were talking about, because they want to take a jab at like Ticketmaster, so they're saying that they could use these NFTs as a way to get like not get around Ticketmaster, but to be like, if you own like the Taylor Swift NFT, right? Like, as an example, and let's say you walk up to a concert, you could show this NFT, get it validated, get it verified, and that would give you access to like VIP features, right? So I saw that as a way, instead of it being used as like a laundering tool, because someone could just buy an NFT for, $300,000, right? And then, sell that off to someone else, as a way of laundering money. So I saw that as well. It's just crazy, like how ridiculous the NFT space got. And now it's a shell of its like former glory. So Padre says, so speaking of, so Padre says, well, I got to scroll up here. So Padre says, crazy to think where gold and silver has gone since our video, especially if you compare them with Bitcoin and Ethereum. That is true, 100%. That is, it's funny. Like I watched a replay of that video some time ago, and man, it was just crazy how like underappreciated or whatever you want to call it, right? It just wasn't on anyone's radar, the metals thing, and you had perfectly called it. Even before that, you were calling a lot of the metal stuff, and now like everybody's trying to get into metals, which was another thing I talked about on that podcast. So hopefully that gets dropped soon. I think it'll be pretty good. You want to see a useless ETF? ORLG. Let's take a look. You know what? Let's go. We'll take a look. Let me pull it up over here. Try to keep everything organized. ORLG ETF. What? Orally? Who? O'Reilly Parts? Is that it? Oh my God, it is. O'Reilly Automotive? No way. Why would they get a 2X? That's wild. Have they reached meme status? Okay, I mean, nothing important there. Oh my God. That's a crazy run up. So this is pandemic. Bro, 340%. That's a crazy run up. That is random. That's random as hell. O'Reilly Automotive gets a 2x leverage ETF. That's like doing a 2x leverage ETF on like Berkshire. Like, what is the point? There's no point in that. That is crazy. Padre says O'Reilly did great during the recession. Recession of what, like 2008, 2009 GFC, or you talking about 2020, like 2 to 23. Let's see. Might as well take a look. Let's see, over the last 5 years. Yeah, I mean, yeah, it absolutely has. So, yeah, 21, then the start of the bear market. And then the bear market officially ended, or was officially called, I guess, October, like October time frame. That was the bottom for the S&P. And at 35%, that's crazy. Wow. Yeah, let's get a Burke U. Man, let's just get a 3X Burke. Okay. All right. Moving on. Let's see who else. We got Taiwan Semiconductor in the news. They're big player in the semiconductor space. The semiconductor ETF SMH has actually been pumping quite a bit lately. We have earnings season coming up. I don't know what the earnings calendar looks like yet. I haven't looked at it, but it's probably a lot of semiconductor companies coming out. If I'm not mistaken, I thought I saw that Taiwan was on the earnings docket for. Actually, I'll come back to it. Let's listen to what's going on over here
right now, because I do have some breaking news. We've got Secretary of Commerce Lutnick sitting down in moments to talk more about this. Guys, if you could just go to that script that I wrote. There we go. Look at this. Best team in the business. All right. Breaking right now, the White House, the Commerce Department unveiling a new trade agreement with Taiwan. They're calling the deal historic. Here's what you, the CNBC audience, cares about. Taiwan Semiconductor and other technology companies based in Taiwan will make new direct investments of at least $250 billion. As part of the deal, Taiwan will provide credit guarantees of at least $250 billion as well. The United States, along with Taiwan combined, will establish world-class industrial parks in the U.S. They will strengthen us, the U.S., as the global center for next-generation technologies around semiconductors and AI. As part of this agreement, the reciprocal tariff rate applied to Taiwanese goods will total no more than 15%. That is down from 20%, so a 5% cut there. Section 232 tariffs applied to Taiwanese auto parts, lumber, other wood products. They will total no more than 15%. And there will be a 0% tariff rate on generic drugs and some aircraft components. So just to reiterate, that is the news that is crossing right now, according to my sources in the White House. And I will add this, it's not in the draft of the deal, but I'm going to say this. As part of this deal, it is likely that TSMC, Taiwan Semiconductor Manufacturing Corporation, the biggest semiconductor maker in the world by far, is going to add up to 5 new fabrication plants to its Arizona facility. Remember, we were there about 6 months ago with Secretary Lutnick. We showed you, there it is. They're expanding already. This would be 5 on top of the expansion. So that, I believe, would take that number to 8. I know Christina Partsinevelos has covered this extensively. There's some of the new fabs already being built. We are waiting on Commerce Secretary Howard Lutnick to join us live and exclusively to talk more about this.
How can you not be bullish on AI right now? Like, it's so ridiculous that people still are still like fearful of this bubble, right? When all of this money is being poured into AI data center and CapEx, right? It's just so hard to like actually believe in that bear case or this bubble thesis. It's incredibly difficult. Taiwan Semiconductor putting another, $250 billion into the U.S., more jobs, more factories. I mean, semiconductor bullish easily for the next couple of years. So, yeah, shout out to anyone who's in TSMC. TSMC has been on the radar for quite a while. Again, there's more to this story, especially for viewers who don't know or who are new to the channel. Big thing for Taiwan Semiconductor, and the whole reason why they're moving here to the United States is because during the Biden administration, they saw that this was a bargaining chip. This was a chess piece on the table when it came to China, right? When it came to China invading Taiwan. So TSMC, one of the biggest fabs in the world, they do pretty much all of. Now, you probably have to fact check me on this, but I'm pretty sure this is accurate. They do pretty much all of NVIDIA's chips, right? This is a huge deal. They do a great amount of chips for most semiconductors. So if Taiwan was to get invaded, TSMC gets taken off the board, that would be a huge problem for the United States, right? So during the Biden administration, they were talking about having TSMC move into the United States. And then during Trump's administration, they basically forced them to move into the United States vis-a-vis a tariff, right? They're putting tariffs on the whole world. And Taiwan was like, okay, well, we'll finally move, to the United States and start building up there, right? So again, you have some political stuff that's happening in the background. Again, TSMC, one of the most important companies in the world. Looking at the chat, so Andre Brown says, I have been writing Psy from Tap Alpha to do an ETF on the semiconductor space through SMH. I think a lot of people were waiting for Roundhill to do the same thing, do the 1.2x leverage. If Psy could do it from Tap Alpha, I think he would get a lot of inflows. And the reason is because Chippy is the only ETF on the market, as far as I know, that does any type of income off of semiconductors. And Chippy is, obviously been gaining a lot of traction. It's been, it's making a lot of investors happy. I still like Chippy. I still think it's a great fund. I had it and held it for a little while, but ended up getting out of it only because, one, I made a stupid mistake, but two, it didn't make sense for me to hold Chippy at that time. And I'm glad I don't, because, I need to be in more growth, right? More growth assets. But yeah, that is, if they were to come out, if Tap Alpha was to come out with a income, based ETF off SMH, I think it'd gain a lot of popularity. Let's see. We're going to come back to that. We're going to come back to that Chippy thing, Chippy and Tap Alpha. So Odysseus Fort says Chippy doing well. It hit $60. That's awesome. Let's see what else we got. So Big Hat says, I'm surprised yieldmax is the only one with an income ETF on semis. I'm really surprised about that too. When I looked at it, I think 8 months ago or 9 months ago now, it was the only ETF, and it still is the only ETF on the market. So Padre says it's 42% of NVIDIA chips. Okay, all right, so it's 42% of NVIDIA chips. Andre says, no matter what tech company comes out, they will have to buy chips from the same group of chip manufacturers. That's true, and that's why ASML is also one of those big players in the space, because they're the only ones that do the lithography. They're the only ones that sell the lithography machines. You have China that's coming out with their own product, right? They have to copy, but they're coming out with their own product that does similar work to ASML. But I think ASML is one of the more important companies. And Joseph Carlson, he's another YouTuber. He has a pretty sizable position in ASML. He did a really good video on why he was bullish for ASML. So if you're curious, I would check that video out. So for kicks and giggles, let's go back to, let's check out yieldmax real quick, because I want to see what, oh look, Alti. We'll do Chippy, because I want to see what their AUM is for Chippy. So let's see. AUM. Okay, am I missing it here? Oh, I guess this is net assets, maybe? No, that's not. That can't be it. Maybe it is. If it's 217 million, I think that is really, I don't know. I think it should probably be more, to be honest. I guess so. I guess that's their AUM for Chippy is 217 million. I mean, it's still really good, but I mean, if you're bullish on the semiconductor space and you want to make some income, Chippy would be a good alternative. I still think though that the risk with Chippy is that if SMH was to have a ground or a grind lower, or like a sharp decline and then a grind lower for months, this is going to harm Chippy. This is going to harm the NAV because it pays out every single week. Yes, it's very low, relative to some of their other funds. I think it's like 35% or something. Oh, 45. Okay, so they upped it. Man, that's really good. But again, they're paying out every single week, right? And that money has to come from somewhere. So that would be kind of a risk inherent if you invest in Chippy. Like I posted about this And someone was like, oh, you obviously didn't see Chippy during the April sell-off, right? And I'm like, oh, you mean the sell-off that happened in like one day and then we recovered in like a week? You mean that sharp V-shaped rally? You know, Chippy, of course Chippy done well. Of course Chippy did well during that time. But if you were to put it in a real bear scenario, like a real bear market that lasts a couple of months, I think this would obviously harm Chippy or harm the semiconductors income ETFs, because again, they still have to pay out every single week, and that money is going to come from somewhere. So, you know, people are like, oh, there's no NAV erosion with Chippy. Well, that's not true. There's NAV erosion with any ETF. It's just the gains, a bull market or a sector bull run is very good for these ETFs. All right. So it's just my opinion, of course. You know, I'm sure there's some out there that will probably have a difference of opinion, but that's just kind of what I think when it comes to these high yield funds. So yeah, 217 million says Odyssey's Fort. Andre says, I'm hoping yieldmax doesn't mess Chippy up. I don't think they will. They actually, so they had, it was Chippy, GPTY, and I forget the third one. But these three use kind of the same strategies. Well, they use the same strategies for sure. But they were like, the strategies that they use are not like their cover call ETFs, their single stock cover call ETFs, where they're trying to distribute, you know, maximum yield. These ones are built a little more better, are built a little more with, you know, NAV appreciation in mind, or capital gains or capital appreciation in mind. It's not just let's do cover calls, and if we screw up on the cover calls, we're still going to pay out a ton of yield, right? Chippy, GPTY, and I forget that third one. But you also have from yieldmax the target 12s or target 25s. These ones I haven't really looked at. I mean, I'm pretty sure everyone is tired of anything related to MSTR, so I'll skip that one. But you have NVIDIA and you have Tesla. But they had some other ones. Yeah, target 12s, the biggie, the real estate one. So another real estate fund besides RNTY was, what was it? Oh my God, I'm drawing a blank. It's from Neos, IYRI. So there's that one in Soxy, right? These are targeting at least a 12% distribution yield. Yeah, so yeah, Chippy, GPTY, and LFGY. GPTY was more of like a broader AI play, if I'm not mistaken. Chippy is the semiconductor space. I forget what LFGY was. Just real quick, I just got to know. Industry and tech. Yeah, I forget what was actually in this thing. It's been so long since I've looked. Oh, this was the crypto one, if I'm not mistaken. Right? I think this was the crypto one. Yeah, and then yeah, this is the crypto one. And then GPTY was a combination of like AI companies and semiconductors. And that one has done pretty well, all things considered. So, hey, Super Straight Guy, welcome back. Real Evil Duck says Soxy's 28% NAV plus 12% distro versus Sox's 54% no NAV erosion, just robbery. Yeah, but those are two different products, right? Like I get like, oh, total return, but they're still two different products, and they still have two different complete outcomes, right? Sox is pure gains, right? Pure gain appreciation play. Of course, there's not going to be any NAV erosion on that. I mean, they don't pay out anything. And that's crazy. That's another crazy thing that I've seen in the comment sections of like videos. Like people will say, oh, there's NAV erosion on like an S&P 500, which is wild. Like what do you mean there's NAV erosion? Do you not understand what NAV erosion actually means? But with the income funds, the high yield income funds, yes, there will always be NAV erosion. I stand by that. I'll die on that hill. Soxy's 28%, you know, I still think that's really good. Plus it's paying out that 12% distro. Yeah, you're not going to keep up with, you know, something like a Sox in total returns or, you know, capital gains. But again, it's two different. You wouldn't invest in Sox expecting, you know, capital gain, like huge NAV appreciation, right? I think a lot of people, should probably understand something like that, the actual difference between these funds. You know, like I don't know. It's just my thought is all. Odyssey Fort says Elon needs more chips. Not enough chips being made. That's 100% true. He has that partnership with NVIDIA, but he's also said like if NVIDIA can't give them their chips, they're going to look elsewhere. So he made that abundantly clear. Okay, all right. Moving on, guys. So silver, all right. Silver is in the news. I'm going to just basically summarize this, but yeah, BMO saying that there could be a huge problem with silver, especially since it had such a huge run up, and it'll probably have a sharp decline, right? Essentially, silver's rally to new record highs has pushed the gold silver ratio to 50, its lowest level since March 2012. And commodity analysts at BMO Capital said shifting supply dynamics may mean the ratio's current trajectory is unsustainable. I forget the in the chat if you guys know what I'm talking about, but there was I guess the futures silver market. They put a pause on buying silver, or no, it was like a U.S. government entity or something. But they basically put a pause on buying silver for now. And it's because of, I guess, everything that's happening. I haven't done a deep dive into silver's crazy run up. Victor or Evil Duck would probably know more than me. But yeah, basically, silver is just having this crazy run up. Some of it does look like it's being what's the correct word that I'm looking for? Fake, I guess. I don't know, but yeah, some of the crazy run up it's having is putting pressure on other banks. Like they're selling silver that they don't have, I guess is the summary of it. So yeah, BMO said investors should pay attention to silver consumption in the solar power sector, with silver demand from solar likely past its peak until solid state batteries are commercially viable. The bank sees silver supply increasing, which will lead it to underperform gold. So that's a pretty bold statement. So the thing about the solid state batteries, and I had to do a little bit of digging on this because manipulation. Thank you. Artificial manipulation. Thank you. God, I couldn't think of that for the life of me. But back to the solid state batteries. Apparently these solid state batteries, which are under development by some companies right now, this is going to be like, you could charge a whole EV car in a couple of minutes. Right? Or a cell phone. You could charge a cell phone in a couple of minutes. Whatever these solid state batteries are, and what they're going to be developed for commercially, they're going to need a lot of silver. And I was watching this video. I think it was Eric Sprott that was actually talking about this, that the amount of silver that they're projecting that they need is not being mined, right? You can't mine enough of this. So where the hell is this other silver coming from? So leading to Padre's point about artificial manipulation. So once the solid state batteries come out, they're going to need a lot of this silver, and there's not enough silver, right? There's not enough silver out there. Commodities markets, metals market is just absolutely crazy what's going on there. I really recommend, if people are not looking into the metals market, to go on YouTube and just go down that rabbit hole, because there's a lot of interesting things that I never even thought of. So yeah, yeah, 90K leverage on silver, or 90X leverage on silver. Yeah, let's just go for the 100 and just get to a nice round number. Okay, so anyways, we already covered the AI semiconductor market. OpenAI made a conscious decision to sit out Apple's Siri deal. Okay, so Google was the one that took that Siri deal. OpenAI, I haven't even read this article. I had it open, couldn't get to it. But despite speculation that Apple passed over OpenAI to run its updated version of Siri, the ChatGPT maker made a conscious decision to sit out the move, the Financial Times reported. OpenAI made a conscious decision to not become the custom model provider for Apple in the fall of 25, and would instead work on its own AI device to go past the tech titans, the news outlet added. And OpenAI did acquire a phone maker, or a user wearable device maker. I forget their name, but they did do a merger acquisition with them. So they're trying to come out with their own hardware. OpenAI is expected, or hopefully expected, to do an IPO later this year in 26, probably early 27. So something to keep an eye on, something to just be aware of. Who knows what that valuation is going to be? That could be a crazy, crazy valuation. Victor says, I'm a heavy duty mechanic. Silver is not profitable to mine. It's mostly mined as a byproduct. I'm speaking based on mining in BC and YK Canada. Hey, you'll have more to say about that than I do. I'm not that intelligent when it comes to the metals market. Maybe Victor or Evil Duck will have something to add to that. Despite the conscious decision, OpenAI has an existing relationship with Apple. Apple announced a partnership with OpenAI in June 2024 at its developer conference that has ChatGPT integrated into Siri. All right, ChatGPT is also integrated into Apple's visual intelligence, which lets iPhone users learn about the world around them, which is similar to like the Google Lens. So, more news about OpenAI. It seems like any company they do business with usually skyrockets. But, Google was the one that won, I guess, that contract or that partnership with Apple. And we saw Google's price jump. We saw Apple's price do a little better. So that was good. So shout out to anyone that owns that. We already covered this. Of course, we already covered this in that video. So I'm going to go ahead and skip it. Again, I don't look at any of the videos because it'll take too much time in my morning. So I usually, especially for the stream, so I'll go back. So we already covered this earlier, so won't cover it now. So that's pretty much it, guys. Like that's the stream. That's the stream. Maybe we could look at an ETF skeptic. I don't know if you're in the chat still, but do you have an obscure ETF we could look at or something like that? Evil Duck says silver will be profitable when it's 150 bucks. Skeptic says so AR instead of VR. Yep. It's crazy how much manipulation's happening in the silver market. Like I like just look at these videos, like just go down the rabbit hole. Google, or not Google, but YouTube silver, silver mining, I guess, or whatever. And you'll see how crazy some of these videos are and what they're talking about. Like there's not enough silver being mined, yet there's funds and futures trading on silver that doesn't even exist. So it's crazy. So the Gara ETF, I saw that. I saw you posted that earlier. So let's take a look. The Guinness Atkinson Real Asset ETF. Here we go. Speaking of hard, so when I looked at this earlier, because I did like look at the postings that you had for the is this it? No, this is not it. Where is it? Gara. There we go. Yeah, the real assets. So going back to the debasement trade, right? The debasement trade is going to reward, just based on kind of my own research and what I think, the debasement trade, if you're a believer in that, is going to reward investors who have real assets. Things like, gold, silver, but not only that, other real assets like REITs, like real estate investment trust. But there's other things that I like part of this, like energy infrastructure is one of them, right? So things that are real assets should benefit investors if they're a big believer in the debasement trade. So let's take a look. So we got Gara, that net. Yeah. So that's not a bad expense ratio. So it's only, damn, it just came out. Okay. It just came out just in time. All right. So let's see. I got to zoom in. I'm sure you guys can't read this. So the case for real assets. Global structural shifts are driving sustained demand for companies that develop, construct, own, finance, and operate infrastructure and real estate assets. Real assets benefit from structural tailwinds as massive long-term investment goes into sectors with substantial footprints such as electricity generation, grid renewal, data centers, telecoms, logistics, healthcare. See, that's another big thing, part of the AI play. If you're looking for, the tertiary or secondary or whatever layers that are supporting AI capex, you have power. Power is going to be a big one. Electricity generation is a big one. Energy is a big one, obviously. I saw an article saying that there's not enough power in the United States, like power generation currently, to even meet the demand of these data centers, right? So that's why there's this huge push for not only nuclear power, but if you look a layer under that, uranium, right? Uranium is a big deal. So that's something else investors could look into. So looking in the chats, Gara is MLPI, but replaced with MLPs but replace the MLPs with REITs. Interesting. Unathletics. Hey man, welcome. SoxQ, baby. It's the cheapest expense ratio of semiconductor ETFs. I like the feeling of just blindly DCAing into it instead of trying to avoid buying at the highs. That's one way to do it. I'm too much of a, I'm more risk averse. No, SoxQ isn't, it's not a leverage, right? SoxQ? I don't believe it is. Or maybe it is. I don't remember. There's too many damn ETFs out there. Padre says IDVO looking strong for 2026 ETF. Real Evil Duck says URA plus SMR. So GAR invests in a diversified mix of real asset business models benefiting from long-term contractual cash flows and built-in inflation protection. Inflation protection is a big one. Again, just talking about what Tiger 21 and what Paul Tudor Jones had said in the past, that they could see that this year, 2026, is going to be an inflation story. Whether you believe that or not, is something I think people should at least consider, given what is going to happen with monetary policy, quantitative easing, interest rates, all that stuff, right? This could be an inflation story this year, and this is when real assets are going to matter. You're going to definitely want to have equities. You're definitely going to want to have real assets. You're going to want to have gold, right? Gold, or in my opinion, I'm just adding it on. You're going to want Bitcoin, right? Bitcoin is my, I don't want to say hedge, but it is part of my portfolio to also take advantage of that debasement trade, but also inflation. Because now it's, digital gold, right? It's now dubbed digital gold. Let's see what they have for holdings. Okay, I know Ventus. They have Prologis. Prologis is a big warehouse logistics company. It's a REIT, so that's yeah, no duh they would have that. Common stock, National Grid. Yeah, I don't recognize a lot of these holdings, but Brookfield Infrastructure. Yeah, if you believe in the debasement trade, I could see an ETF like this definitely playing a part as part of like a diversified, portfolio. Of course, you're probably not going to get some insane, 100%, or maybe, I don't know, maybe you might get it, but depends how bad it gets. But yeah, I couldn't see this being like 100%, year to date, end of December type of play. But this would definitely be a theme that you would invest in, right? If you're a believer of that debasement trade. That is crazy. Crazy. Investors seeking income, dividend growth, potential capital appreciation should consider GARA as a way to access real estate and infrastructure assets. Real assets can play a vital and a hard to replicate role in traditional portfolios by offering defensive characteristics and growing income streams. Does it? Well, I guess it wouldn't have paid out a dividend yet. I don't think so. No. Nope. Well, I think that'll do it for me, guys. I got to try and get to a gym. Yesterday I was so damn tired. I didn't even get up. I was pretty much in the bed all day yesterday. I was pretty damn tired. So today I definitely want to try and get my lazy ass to a gym. But I appreciate you guys joining me for this stream. All right. You guys have a great evening wherever you are in the world. I'm going to go ahead and cut it here. Appreciate you joining me for this coffee hour. And outside of that, I will see you guys in the next stream. You guys take care, all right? Oka Unathletic says, SoxQ isn't leverage. It's basically a more balanced version of SMH. SMH is super top heavy, NVIDIA, but SoxQ was like 45% for the year, so I'm in. Hey, awesome. If you're making money on SoxQ, man, congrats. We all trying to make money out here. That's it. All right, guys. You guys take care. I'll see you in the next stream.